Hello and good morning, everyone. Happy New Year to everyone. So we had taken a short break during the holidays, but now I'm back. So today, let's talk about the markets, the key events to be expecting this week, with a key focus on the important market developments and where we might find some market opportunities. So as always, this is the Market Snapshot series. It happens every day from Monday to Friday at exactly 11 a.m. So make sure to subscribe to the channel. If you haven't followed FXPesa, follow and you'll get live updates. So today we'll be talking about the key market events. So I'll be jumping right into the economic calendar to try and understand what are the key events today. So as you can see, the week started quite fast with a German preliminary CPI month-over-month coming in at 0.4%, showing that consumer inflation is increasing at a much bigger pace than expected. The overall consensus was 0.3, we got 0.4% versus a previous reading of negative 0.2, which is basically showing that inflation is finally kicking in and getting hotter in the European countries. So we also had the final services PMI from the US, which showed a slowdown in the services sector, down to 56.8, which is below the forecast and previous reading of 58.5, showing that the services sector is slowing down, but still above 50, meaning that it's still in expansion territory. So early this morning, we had inflation data coming in from Switzerland. It came up as expected at negative 0.1%, showing that prices continue to reduce in Switzerland. This is not a good thing for the central bank, but good thing for consumers. So for the rest of the day, we'll be having quite a number of economic announcements. One, we'll be looking at the construction PMI for the UK, the core CPI flash estimate for the Eurozone, and of course the overhead CPI flash estimate year over year for the Eurozone, where we're expecting inflation to have also ticked higher from the previous reading of 2.2% up to 2.4%. So in the afternoon, we'll be getting the IV PMI data from Canada at 6 p.m. Then we'll be focusing on ISM services PMI still at 6 p.m. and the JOLTS job openings in the US still at 6 p.m. So the key market movers for the day are expected to be the services PMI and the JOLTS job openings. Clearly, we don't expect much of a change from the previous reading of 7.74 down to 7.73. But if there is a huge variance between the actual outcome and the forecast, then we might see some movement, same as the services PMI, which is expected to have strengthened to 53.5. So when services are doing well, it's usually positive for the dollar. If they're doing badly, it's negative for the dollar. And on the other hand, job openings will be one of the key indicators of the job market in the US. Remember, this is the first trading week of the year. So we should be expecting to see a lot of activity, especially on Friday when we get the official US non-farm payrolls, where the unemployment rate is expected to remain the same at 4.2%, whereas the non-farm employment change is expected to be 159K, meaning that there is an overall expectation that the number of new jobs created in the US economy in the private sector may have been much lower in December compared to the previous month, where we had 227K. So average hourly earnings, which is basically wage growth, is expected to have increased by 0.3% in the previous month. So the previous increase was 0.4, meaning that wages are also slowing down. We'll also be looking at Canada job market report still on Friday at 4:30 p.m., where we expect the unemployment rate to have increased to 6.9%, up from the previous reading of 6.8%. And of course, the number of new jobs created in Canada in the month of December is also expected to be much smaller at 25.2K. That's about half the number of jobs created in the prior month. So also within the week, we'll be getting Chinese CPI inflation report on Thursday. Then on Wednesday, this is where we expect the ADP non-farm employment change, as well as the weekly unemployment claims report. Also, importantly, we'll be looking at the crude oil inventories and the FOMC meeting minutes. So clearly, it's quite a busy week. So outside of that, there's other stuff that's happening in the markets. One of them, you notice that on January 6th, that is yesterday, the US current President Biden permanently bans offshore drilling in 625 million acres of ocean, making a Trump reversal difficult. So immediately after he announced this, there was a reaction in the oil markets. And then later on, we had another update. In this case, Trump promises to unban offshore drilling, reversing Biden's policy. So in this case, what this basically means is that um, Biden has been going for these green energy policies, but now that path is about to come to an end as Trump is going for full-scale expansion in oil production in the US, which is expected to have downwards pressure on oil prices. So we'll be looking at the oil charts later in the presentation. So you can also see some key highlights happening in the stock market sector. In this case, with NVIDIA leading the path, jumping 9.93% since the year started. And this is just a couple of days. So from the first trading day, which was the Thursday, 2nd of January, the stock is already up 9.93% with a market cap of 3.66 trillion, which basically made sure that NVIDIA overtook Apple and became the biggest company in the world in terms of market capitalization. So outside of that, we also have Tesla making big news with NVIDIA's CEO Jensen Huang basically saying that the future of AI and robotics is huge, especially when it comes to robotics as well as automated driving cars. So since the year started, and it looks like a very promising year for the company. So outside of that, I'm trying to see if there's anything else that I may have missed. So one, we also have the big news happening in Japan, where the yen drops the weakest since July on fixing and retail investor flows. So the yen slid to its weakest since July against the dollar and underperforming all major currencies, with analysts attributing the drop to Japanese retail investors' outflows as well as to Tokyo benchmark fixing. So the big story from the NVIDIA announcements is here. So NVIDIA's Jensen Huang says AI agents are a multi-trillion-dollar opportunity and the age of AI agentics is here. So NVIDIA CEO Jensen Huang unveiled the next generation of RTX Blackwell GPUs at CES 2025, alongside Cosmos, a foundation model aimed at accelerating autonomous vehicle and robotics development. He also declared the rise of agentic AI as the next major technological shift, predicting AI agents will drive a multi-trillion-dollar industry and transform how people work. So more on the story is available. So I'll be sharing the story in the comment section. So just in case you have some time, you can dig right through it. So for those who are listening in from Eldoret, you should know that we will be having an event, a masterclass event on the 24th of January. So be prepared to register. We'll be sharing the links in our socials, and hopefully we get to meet, interact, and learn and trade together. So outside of that, I think it's time we jump into something different. So in this case, we try to look at the charts, try to understand some of the key highlights before we end the session. So remember, as always, if you have any questions related to the presentation, always feel free to type that in the comment section and we'll be responding as we approach the end. So one of the key highlights is the USD JPY chart. This you can see how last year we saw the Japanese yen strengthening by about 13% from the multi-year high. So in this case, I would say a multi-year low because it was the yen that was weak. But since then, around September last year, we saw the yen losing again to the dollar before making a drop somewhere around November. Then in December, the dollar continues strengthening against the yen. So now we are here. You can see the pump that happened yesterday. So for the first time, breaking above this resistance around 157.928 before jumping right back inside, which means that the market is still trading within this range. With more of a sideways momentum than the overall expectation is that we continue seeing the yen making at least some form of comeback, especially after the Ministry of Finance in Japan threatened to intervene if the JPY continues weakening in the markets again. So in this case, it makes more sense to be looking forward to a correction here, perhaps the market moving back down to retest the yesterday's prices, that is the yesterday's low. So on the other hand, we have gold basically being stuck in this sideways momentum. So I'll be removing all of these. So notice that for the nearest period, all we have been seeing in gold, sorry for that, trying to do a horizontal line here and another one here. And we can obviously see that within this period, gold hasn't been making much of a movement. Yes, there's big swings between this resistance and support, but now it seems more of a sideways momentum. So given the performance of the dollar index, which basically started the year on a low, so you can see that we have been experiencing some sharp drops in the dollar index. Then the weakness in the dollar index might be a pretty good boost for gold. So there is a good chance we could be seeing the market challenging last week's high. So potentially we could be seeing the market retesting these levels around the price action level of 2,664, and that's per ounce of gold as the market continues along this path. So notice how we have this particular trend line playing out here. And of course, we also have another one playing around this area here. So I'll try and make it more accurate. So technically, we are looking at a market that is playing along these two trend lines. So now, looking at the current cycle, it seems like the market is now attempting to push towards the higher side. Of course, if we happen to breach yesterday's high, then the probable target is more likely 2664 price action level. So given the drama that's happening with oil, so at first, burning oil production was positive for oil. So we saw a small boost in oil prices. But now with Trump promising to reverse all the Biden's policies on oil, then there's a good chance that we should be seeing the market changing direction. And in this case, we are looking at a very particular resistance level. So this is a resistance area that the market was unable to break for quite a period. Then after breaking, you can see the immediate reaction in the market changing direction. So there is more likelihood that we could be seeing the market going for a reversal with nearby or immediate target being around $74.3 per barrel of oil. So there is a good chance we could be seeing the market going for the drop and retesting this previous high, now turned into a support. So on US equities, we had some very short-term correction, prices pulling back downwards. But then with the news happening, especially in tech, we are seeing a very strong recovery. And in this case, if you look at the performance of US equity indices, in the last 2 days, it has been more of a positive momentum. So we don't expect this to slow down. And of course, there's still the Trump trade. And we all remember that the inauguration is still happening on the 20th of January. So we only have 13 days until Trump officially becomes president. And that could likely boost the US stock market further. So for the Nasdaq, I expect to see at least the market pushing a bit higher towards 21,847 price level. So for the Dow Jones, you can see the correction also happened on the daily. So if you zoom out, you'll notice that this was a trend line that was broken and as the market pulled back downwards. But then the pressure to move lower doesn't seem to be continuing. So it seems like the market is getting into this form of consolidation, where in this case, we have our support area along this line here. And for the resistance, it's somewhere around this area here. But then in the most recent price action, the market has been trending towards the lower side. So chances are we should be looking for a potential buy market entry as the market keeps pushing lower. So there is a good chance that this momentum could continue for a while, but the idea is to be looking for a bullish position. So we'll be monitoring closely to see if there's chances of the market bouncing. So as usual and as always, remember this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So in this case, for the S&P 500, we managed to hit a pretty strong resistance area. And since then, the market pushed further back downwards. But the idea is still to be looking for a bullish kind of position as the market continues to recover. So potentially, you should be looking for signs of bullish entry, signs that buyers are coming right back in, and then look for bullish positions rather than going short when the market has made such a strong recovery, especially in the last 2 days. So as for Bitcoin, we have seen the market stuck in a range for months. So we experienced this whole range happening last year before Bitcoin eventually went for the big break and rallied all the way to 108K. This was the high as per last year. So since then, after getting to this high, there was a pullback and the market went all the way back down to a bottom of around, this was 91,434. So from this price action area, we saw the market bouncing, and this is as per the end of the year. And then as we started this year, you can see the strong acceleration higher, meaning that there is more likelihood that Bitcoin continues pushing higher. So in this case, we're already at $101,788 per Bitcoin, and there's a good chance we could be seeing a continuation of the same. So we continue monitoring the small consolidation that is currently happening since yesterday's high, and then we see if there's a strong break. So a strong break towards the upper side would be a more likely trigger for a bullish position. So outside of that, looking at other major pairs, the pound USD is still making a very strong recovery following the weak dollar. So yes, it's making a strong bullish momentum, but still, it's still along the resistance line here, and you can already see the market rejecting those higher prices. So if you happen to see the candlestick closing much lower than this, then the idea would be to go for short selling positions, having hit this major resistance, and still there's some key levels to be retested, especially along this area here, 1.25042. So we also have Euro USD also making an impressive recovery after the big sell-off here. But then now we are approaching a major resistance area. So if we happen to see a break, it's well and good. But then if the market fails to move above this area here, then we could be looking at a temporary pullback. So we continue observing the price action around this area since the market seems to be struggling to break above yesterday's high. So also on AUD/USD, it seems to be the same story across board. These currency pairs are dominating against the dollar as we start the year. So in this case, we have a breakout retest continuation setup. It's on the 4-hour chart. So if you use the 1-hour chart, you can see the breakout happened yesterday. And now we are on the likelihood of the market going for the previous high. So we could be seeing the market accelerating this recovery and potentially targeting the previous high yesterday, which is 0.63018. So outside of that, the Nikkei 225 index remains here. So it's still within this range, more of a sideways momentum. And as usual, we know that whenever we see the market getting closer to the upper trend line, we observe for a break or reversal. And in this case, it seems like we have a reversal in the house with a potential target around 39,187. This is in yen. So potentially the market reversing further back downwards to this previous support. So the dollar trading against the Swiss franc, we are seeing quite some activity, especially this morning. So an attempt to move further back downwards was met with a strong demand, especially after inflation came in at negative 0.1%. So when you see such kind of inflation report, it should be positive for the currency. So in this case, we are seeing the exact opposite. In this case, the dollar is mounting some strong support against the Swiss franc. So we could be seeing the market pushing a bit higher. So the price action yesterday and the previous day seems to have priced in the inflation report. And now we are seeing the opposite happening. So there is a good chance that we continue seeing the dollar recovering against the Swiss franc. So as for the New Zealand USD pair, this is what we are observing here. So a major resistance area, which was broken yesterday, market went right back inside the range. So the range was around this area here, where the market was basically moving sideways. Then now we are seeing a clean break, which means that the market could be headed a bit higher. Of course, we had a major impact move around this area here. So a breach above yesterday's high would only mean that we get a chance to see the market moving to 0.57 to 16. So that's it for the day. So I'll be checking on the questions, respond to that as we approach the end. Happy New Year, Leveraging King, and thank you for joining the session. Hello, Paul Carrier. I can see Norbert in the house. Thank you for joining. So suggestions on checking the NASDAQ and the US30, we already covered that. Kindly say hi to the team in Entebbe, Uganda. There's a request to check on Pound Yen and AUD USD. We already covered the AUD USD. A good question from Thomas Mashuma. Can you enter trade on H1, leaving out M15 timeframe? Yes, you can, but it's usually much easier. It's much more precise to make a market entry using the 15 minutes time frame compared to the 1 hour time frame. So for instance, I would say like our chart of the day would most likely be Brentwell. It hasn't happened to make that break yet. Even if you go to the 15 minutes chart, you can see that since the market opened, we have had very small candlesticks, which is likely an indication of little volume in the market, but eventually there will be a big push either down or up. So if we see evidence of that coming in, then it might be a nice idea to go for a short selling trade. So when you're observing on the 15 minutes time frame, you're able to view the price action candlesticks much easily and make a better decision. So outside of that, there's the request to check on Pound Yen. So let's check on that as we approach the end. So this is Pound Yen. From the daily time frame, this is how it looks like. So let me just clear this. So clearly, after the high that we saw last year, the market made quite a strong correction as the yen was strengthening. This is the period when the Bank of Japan was hiking interest rates. But then for the rest of the year, what we saw was the market making a recovery from this point and forming another high around this area here. So this was the high that we saw in October last year. Then the market dropped again with the yen strengthening yet again. And then in the month of December, another recovery upwards. So now, as we start the year with the yen being pretty weak, it only means that we should be expecting to see the market retesting the previous highs. So in this case, more likelihood of the market going for the previous high, and that's around 199.753 yen per pound. So that's it for the day. Thank you very much, everyone. So remember to share the video. If you're watching this on X, kindly like and retweet the video. If you're watching this on YouTube, you can leave a comment, subscribe to the channel, and of course, make sure to check out the latest episode of the Bullish Banter podcast. We had a really good guest. The podcast is available on FX Pesa YouTube, as well as many other podcast platforms. So thank you, everyone. Enjoy the rest of your day, and I hope to see you on the next session.